Welcome to the channel. Don't forget to like and subscribe. Today we're going to talk about everything you need to know before saving in a time deposit account. When you have savings in a bank, you may have asked this question: why does the money take so long to grow? Is there a more optimal return? Indeed, one of the tests for savers in the bank is inflation, with savings interest of only 4% to 5% per year. If reduced by 3% inflation, you only enjoy 2% to 3% net interest. Of course, this is a concern for fund owners. Moreover, currently there are various types of investments available and you can choose from, ranging from low risk to high risk investments, such as stocks, bonds, to mutual funds and gold. But for you beginners, it is relatively appropriate to try deposits to multiply funds safely. Before deciding to put funds in a deposit, make sure you know the following 5 important things. The first one, the difference between deposits and savings. Deposit is one of the banking products that provide services to save funds within a certain period of time. This deposit interest rate is higher than the ordinary savings interest rate. In the deposit, you will choose the period of depositing the funds, starting from 3 months, 6 months, 1 year, and so on. Second, there is a fee if you withdraw funds faster. During the deposit period, you cannot withdraw your money. If you withdraw funds before the time period expires, you will be charged a disbursement fee. Understand that you disburse funds outside the initial agreement. The amount of the auto-scheduled disbursement fee varies from bank to bank. Third, guaranteed by the government. In addition to low risk, time deposits and savings are classified as safe deposits because the value is guaranteed by the government. If the bank where you deposit your funds is closed, your funds are still safe because they are guaranteed by the government with the maximum limit. Fourth, deposit interest rates are always changing. Deposit and savings interest rates always change every 4 months. The interest rate is determined by the Deposit Insurance Agency, a government agency that oversees and regulates customer deposits in banks. If you want your funds to be guaranteed by the government, then the interest rate you receive from the bank should not exceed that interest rate. If more, your funds will not be guaranteed by the government. Fifth, calculation of deposit interest. If you are interested in placing funds in a deposit, it is better to learn the calculation of deposit interest first, because the greater the amount of funds invested, the greater the interest earned. In addition, you will also be charged fees such as taxes on deposit interest according to the nominal amount of certain funds. How time deposit accounts work. With a time deposit account, such as a certificate of deposit, you have to commit to leaving your money in the account for a specific period of time, which is referred to as the term. Another reason you may see time deposit referred as term deposits. The account will pay interest on the amount you deposit, and longer terms often pay a higher interest rate, depending on market conditions and the bank's current offering. For example, some certificate of deposit may require you to leave the money in the account for 20 months, 2 years, or more, depending on the details of the account. Shop around for the best certificate of deposit rates to see which banks and credit unions will offer you the best return on your investment, depending on how much cash you have saved, how long you want to commit the money, and what is your overall financial goals. Time deposit accounts versus demand deposit account. A time deposit account is not the same as a demand deposit account, such as a checking or savings account. With checking and savings accounts, you have the flexibility to take money out of the account on demand at any time you choose. A money market savings account is another form of demand deposit account. If you need money for everyday spending, get a checking account. Time deposit accounts may be a better place to put your savings, especially if you do not expect to need to access the money for a certain length of time. That is all from me.